You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
So what do FAs think about options? Do they use them? If so, yes. If not, why not? Well, OCC commissions Cerulli Associates to find the answers. And with us today to share the results of that study is Cerulli's senior analyst, Emily Sweet. Please join me in welcoming Emily Sweet.
All right, good morning, everyone. You ready to talk some more numbers? So what we did with the OIC is we got together and we tried to decide what do financial advisors think about options and how do they use options. And so the point of this study is to give you all some more ammunition to increase the adoption of exchangeless options with advisors. So what we're going to do is we're going to talk about just that. We're going to go through some of the behavioral things, some of the recommendations that we think is good as an industry for you to increase adoption with financial advisors. So first of all, has anyone heard of Cerulli Associates before? Anyone seen our data? Yeah. So what we do very simply is we publish research and we do consulting. And we have many different groups. And what my group in particular does is we look at all things financial advisors. We think about how asset managers work with them. We think about how broker-dealers work with them. And our goal is to understand the behaviors and help people run their businesses to reach these advisors. So what we'll do over the next 20, 25 minutes or so is first, I'm going to start backward and give you the recommendations. So I'll give you what we think are the key things coming out of this study that will make it easier for the industry to address advisors in terms of increasing options use. I'll give you a few details about this study so that you know how we went about it. And then we'll talk about the profiles. So we broke advisors into current options users and those who don't use options. I want to give you some behavioral characteristics and talk about some of the ways they think about options. Second to last on this list is the aspirational bucket. So we took the advisors who are the most successful in terms of AUM in their practices, and we looked at how they use options in order to try and get other advisors to emulate their behavior. They're sort of the aspirational, how should I do this if I want to be successful? And finally, the conclusions. So what are the things coming out of this study that are the most salient things, the most important for you to remember if you listen to nothing else this morning? So first of all, the study. We got together with OIC and we said, you know, what are we going to do here? We're studying behaviors, and here are the most important things coming out of this. One is targeting the advisors who are most likely receptive to the messaging. You'll see in a minute, we think these advisors are the ones who are not using options, but have raised their hands actively and said, I'm considering using them in the future. So keep that in the back of your mind as we go through these slides. The second thing we recommend is that you form relationships with centers of influence, whether it be from a firm level, a branch manager, a custodian, influential advisors, or even RIA aggregators that are popping up in the market. It's a more scalable way to reach advisors if you can form these relationships with centers of influence. Now, third and fourth on this list are really important. Advisors tell us that the number one reason they stop using options at one point is because of the time management concerns. So if we don't address that as a roadblock and a barrier, it's unlikely that we'll be very successful in encouraging advisors to use options. Number four is really interesting. We don't know exactly what the client influence is on getting advisors to use options, but we know it's material, maybe even significant, and we know it's there. So we have to understand what the client influence is in order to address how that fits into the equation. Again, it's this mega team advisor. Let's use them as an example of a successful advisor with a successful practice and see if we can get other advisors to emulate their behavior to try and work more options into their practice.
So second to last and last on this list, from a firm level, we think firms should be very intentional with their messaging about options and realize that even if they're doing a lot of work to address advisors, it might not be reaching the intended audience. It might not be reaching that group of advisors who don't currently use options. And last but not least, I think there's an opportunity here to increase the market share of that bucket of options that advisors use, increase the market share of exchange-listed options so that their advisors are using more in that bucket of their options and structured product use. So what's the study? What we did is we surveyed about 630 financial advisors. And what we were trying to do is understand their behavior, understand the most successful advisors, their behavior as an example, and also identify, most important, identify the target audiences that would be most receptive to messaging about increasing the adoption of exchange-listed options. So we need to understand advisors, and then we figure out what to do from there in order to increase use. Here's what came in through the survey. Again, about 630 advisors, and they broke down like this. About a third of the advisors said we use options currently. That number is actually a lot bigger than we were expecting. Great for building out the profile of their behavior. Now, the rest of the pie chart here is about 2/3 of the audience. And we broke that into 3 different groups in order to understand the different behaviors. So group number 1, another third of the survey population, are advisors who don't use options now, and they don't really give any indication of considering doing it in the future. A quarter of the population actually used options at one point in the past, and they stopped, mostly for time management concerns. Now, this green section, this 12%, is what I want you to keep in mind. This is the group who don't use options now, but they've actually indicated in a couple of different ways that they're considering doing it in the future. And keep that in the back of your mind, because I think there are several supportive reasons that makes this a particularly good audience. Let's start with options users. So again, this is the third of the financial advisors that we surveyed who currently use options in some capacity. All of these data, figures that come until I say stop, these are all advisors who use options. Now, what we have seen is that there is a demonstrated preference for exchange-listed options. We asked advisors who use options, exchange-listed or over-the-counter. 65% more advisors use exchange-listed options than over-the-counter options, and realizing that this over-the-counter bucket may look a little high because we think advisors probably group structured products into this bucket. So the number is particularly big among independent RIAs. So again, that's a group of advisors who only do fee-based business. So there are pockets of advisors who have a demonstrated preference, and other pockets who have an even higher demonstrated preference for using exchange-listed options. What about the types of strategies they use? So, no surprise here. Most advisors use covered calls, and they use long calls and puts. I don't think that surprises anyone in the room. But what we've highlighted here are that wirehouse advisors and the independent RIA advisors tend to use more different strategies than all of the advisors together. So that's an indication that there are pockets of advisors who are willing to go beyond just the plain vanilla strategies and use more diversified, specialized strategies. So here you can see wirehouse and independent RIAs are more likely to use cash-secured puts and collars than the overall group. Again, it's just an indication that advisors are willing to go beyond the standard use. What about goals? So strategies are important, but we also want to understand what are the objectives of using options. Here we're looking at all advisors as a total that are using options, independent RIAs, again, it's the fee-based RIAs, and hybrids. Now, we define hybrids as those who have both an independent RIA and they maintain their brokerage license, so they do some brokerage business. As you can see here, enhancing yield and income is a big thing. No surprise, right? Covered calls. But as you go down the list and you see more specialized strategies, you can see, and I think this is really important on the bottom, hybrid RIAs use options to incorporate volatility as an asset class much more frequently than the general advisor. So the reason I think that's important is it gives an indication of portfolio construction, adding a new dimension into portfolios, which is bigger than just a specialized use, like expressing short-term views. So again, some advisors are open to more than just the standard strategies and also for more objectives. All right, let's talk about client influence. So strategies, yes, we know what they use. We know the objectives, but let's think about some of the influences that go into this behavior. So when we study financial advisors, we know sometimes they give us biased answers. Sometimes we have to read between the lines to figure out what they're really saying because, you know, it's normal to take a survey and say, well, what should I be saying or what should I be thinking? So what we did here is a little sneaky. We asked them about client influence in 3 or 4, sometimes 5 different spots so that we could then look at the answers and say, okay, what's really happening here? So for those advisors who use options, a third of them say that if the client wanted more, they would do it. Another quarter said that clients have a significant influence on their use of options. So to me, right off the bat, those two things say that there's a material influence from the clients, but only a third of these advisors think their clients are highly educated about options. So on the one hand, you see a material impact, influence from the client, but on the other, you have advisors, 2/3 of them saying, well, we don't really think our clients know that much about options. So interesting differentiation there, which makes it very hard to determine what the actual influence is. Now, non-users, we asked them similar questions. Almost 40% of the advisors not using options said that they would not feel comfortable talking about them to their clients. And we know with financial advisors, if they're not comfortable discussing a strategy, investment with their clients, they're not likely to do it. But 35%, similar number, said that if their clients allowed them to use options or they asked them to, they would do it. So what we're getting here is we're getting sort of different answers. We're getting on the one hand that the clients are an influence, and on the other hand, you know, the advisors don't really feel comfortable or they don't think their clients know that much about options. So what I suggest to you is that the client influence is there and it's real, but it's very difficult to quantify. All right, let's talk about non-users. So again, that 2/3 of the population, of this survey population who don't currently use options. And remember, we broke them into 3 different groups. You've got the I've never used options and I'm not going to do it in the future. You've got the I used options in the past, but I stopped at some point. And third, you've got that really interesting group who've raised their hands and said, I'm considering doing it in the future. What about the factors that would encourage them to use options? The number one thing here across channels is the availability of packaged products. So these advisors have told us availability of packaged products would encourage them to use options in the future. Now, to me, that says ease of use and standardization, which I think are good arguments and good fodder for increasing the use of exchange-listed options, which have those characteristics. Number 2 on here, the client factor. Again, 35% of these advisors, even though they don't necessarily feel comfortable talking about it to clients, have said, if our clients ask us to use options, if they allow us to use options, we would be encouraged to do it. So last on this list is technology. I would have assumed coming into this and looking at it, yeah, you know, technology is probably a pretty big factor. Time consumption is a big issue with advisors, so I would think technology was going to be a big factor. It wasn't huge here, but look at the wirehouse number. 43% of wirehouse advisors who don't use options said that having the technology available to manage options positions would encourage them to use them. Keep that in the back of your head. We're going to come back to that in a minute. So what can you do from a firm level to promote the use of options? Remember this idea of the center of influence, reaching advisors in a more efficient, scalable fashion. So what we did is we asked all of the advisors, does your firm do any of the following to promote the use of options? Check a box. And we compared the answers of the non-users, those advisors who don't currently use options, to the advisors who do use options. And the interesting thing was the answers are very different in a lot of these cases. Here you're seeing wirehouse, national regional broker-dealer, and independent broker-dealer. Those are the 3 channels that are most influenced or have that presence at the firm level message. If you look in the middle here at these orange boxes, in the national broker-dealer space, 70% more advisors who don't use options said that their firm does nothing to promote options than the ones who use them. So what I would suggest to you is that if there's messaging going on from a firm level, it may not be reaching that group, big group of advisors who don't currently use options. So the effort might be there, but it might only be reaching those advisors who are pre-inclined to hear that message. Same trend in the independent broker-dealer space, a little bit tighter in the wirehouse space. Now let's come back to that technology idea. In the wirehouse group on the left-hand side of the screen, if you look down toward the bottom, you see technology. See that difference between advisors who use options and who don't? What if those advisors we looked at on the last slide who need the technology in order to encourage them to use options, what if the technology is already available and they just don't know it? So the suggestion again here is, from a firm level, be very intentional with the messaging you're spreading and know that it may not be reaching the intended audience. And to reach those advisors who don't use options might be a good way to spread the message. So confidence, another big thing with financial advisors. Remember, advisors are more inclined to do things if they feel confident explaining them to their clients, comfortable implementing in their portfolios. So here we're breaking down the group of what we call non-users. Here you're seeing those who have considered using them in the future and those who used them in the past but stopped. What I was expecting were advisors who had previously used options to be much more confident in implementing these strategies if they were to do it today. But what we find is that the advisors who are considering using options haven't used them in the past. They're much more confident across the board if they were to implement any of these strategies in client portfolios today. Not high levels. You see the highest level is about a third with exchange-listed equity options. But again, it's a solid indication that this might be a really good audience to increase adoption of exchange-listed options because they're already feeling more confident than the other advisors about implementing these strategies. All right, now we get on to the aspirational bucket. What do we know about anyone in business? You want to emulate the behaviors of the most successful people, the most successful businesses. The same thing is true with financial advisors. They often look to the biggest practices, the biggest advisors, for some indications about what should I be doing, what should I be incorporating in my practice in order to grow my business. So what we at Cerulli define as mega team advisors are any advisors who work for a practice that has over $500 million in assets under management. To us, that's the biggest bucket of retail assets. So any of these advisors that we're categorizing as mega team advisors, they fall in that bucket. So let's look at the behavior of how they use options and how they think about options and see if this might be a good example to give other financial advisors who are from smaller practices. So first, we see that advisors from these largest teams have more diverse objectives for using options beyond the covered calls and generating income. And what I think is important here, if you look at those two orange boxes that are on the slide, is they represent more diverse portfolio construction techniques, downside hedging and diversification. To me, those are indications that are much more entrenched in the overall managing of client assets, meaning options are more entrenched in their business. In both cases, the largest advisory teams are using these two strategies as objectives more than 50% more frequently than the other advisors from smaller practices. An indication that they're more willing to use options beyond just generating income, and they're working them more into their portfolios. How about strategies? Same thing here. No surprise, covered calls are used by these large advisors just as frequently. But they're also using, more than 50% more frequently, other strategies like cash-secured puts and collars. Another indication that they're moving beyond just the plain vanilla option strategies that a lot of advisors are using and are popular today. This one I really like. So here we're not looking at just the big advisors. We're looking at advisors who have dedicated investment personnel on their teams. So an advisor, in order to be in this category, has to say they have at least one research analyst or CIO on staff, more specialized, sophisticated teams. Now, this often tends to correlate with the biggest practices because they have more resources to hire specialized strategies. Excuse me. So, in the case of the teams that have at least one research professional, they use the last three strategies, short calls and puts, cash-secured puts and collars, almost 100% more frequently than the teams that don't have dedicated investment personnel. So what does that say to you? You've got these sophisticated research personnel on these teams, and when there's an occurrence of that, they use much, much more specialized option strategies. Again, another influence to say, hey, look, these are what some of the smartest people are doing. Maybe the other advisors should try and emulate this behavior. So I think I would be remiss if I didn't address how advisors use options in personal accounts. What we found is that, probably not a surprise to you all, there's a very high correlation between advisors using options in client accounts and in their own personal accounts. Here you're looking at the difference between the mega team advisors, the largest groups, and the smallest groups. 90% of the advisors using options from these largest teams are also using options in their personal accounts, and vice versa. If they're using them in their personal accounts, they're almost always using options with their clients. On the other hand, you have the smaller teams, anything under 500 million in AUM. 75% of these advisors are also using options in their personal accounts, so a pretty high correlation there. What that says to me is that there's a higher conviction level, there's more confidence in using these strategies, as represented by very wide use across both personal and client accounts. Now, if you look at those group of advisors who don't currently use options, that 2/3 of the survey population, only 25% of them use options in their personal accounts. So levels of conviction that are lower, lower levels of confidence, very high correlation between use in client accounts and personal accounts. So the point of looking at these large advisors is, let's look at how they're using options, what their behaviors are like, use them as a case study in order to influence the behavior of smaller advisors. I think that's a really good strategy. So what's important from this study? If you take away nothing else from this, here are the things that came out of this that I think are most important. There's a preference for exchange-listed options over over-the-counter options, and there's an influence of the structured products there. So in order to increase the adoption of exchange-listed options, let's use that to our favor. Advisors are already showing a pre-existing preference for exchange-listed options. Advisors and certain pockets of advisors are already open to using more diverse strategies and objectives than just covered calls and long calls and puts. Remember, we saw the independent RIAs, the hybrid RIAs in some cases, and these largest advisors from the largest practices branching out beyond just those standard popular strategies and goals. Again, time consumption is a huge factor here. We have to address it. It is the #1 reason that 25% of advisors who used options in the past stopped using them. Now, whether we address that with technology or we address it with teaching advisors how they can work options into their practice in a scalable manner, it's a really important thing to address. Advisors lack confidence. Remember when we looked at the confidence of, if you implement this option strategy today, how confident would you feel? Remember, there was only a 33% of the advisors who were considering using options who would feel confident using exchange-listed equity options today. If the confidence levels are not there, advisors are not likely to implement these strategies. So educational work could be really important, spreading the message from a firm level. All of these things would help build the advisor's confidence. Last but not least, consider the advisors who have already raised their hands saying, I'm considering using options. It's a small group of the overall population, but again, there's more than 300,000 advisors in the US. They are the ones who are most inclined to be receptive to the messaging. They're the most confident. They have already demonstrated a possibility that they'll use options in the future, and I think it's a really attractive group for us as an industry to address in order to increase the adoption. So, think about behavior. It's not just about understanding the nitty-gritty of the different strategies. The thing that's really interesting here is thinking about how advisors behave. It's not always about just making sure they understand the information that it's available, but making sure that they are able to then explain it to their clients and feel comfortable about using these strategies with their clients in the future. So I'm going to pause there. We have 5 or 6 minutes left. Let me take some questions that are showing up on the screen, and I'd also be happy to take questions if you want from the audience in person. So the first question is, explain financial advisor time management concerns using options. So what we try to understand from advisors is, what are sort of the biggest roadblocks in stopping you from using options? And the time management was the #1 thing. So to me, and we talked about this a bit at the roundtable yesterday, to me what this means is they're afraid of the time it's going to take away from managing their practice in order to manage the options positions. And I think a big factor here is going to be technology. Having the technology, whether it's a dashboard or it's an outsourced service in order to manage these positions so that they have the time to still manage their practice, is going to be a really big factor in getting advisors to use options. So another thing I'll share with you about advisors is that we're starting to see more of an outsourcing behavior crop up. In the past, your standard advisor who's in their 50s, that's the average age of the advisor, they built their practice on the value proposition of, I will invest your money better than anyone else can. So they're a bit reticent to let that go. But as advisors are sort of realizing that their time might be better spent managing the relationships and gathering assets, they're more inclined to outsource some of their business. So I think they're getting more concerned with where they spend their time, and this might be one chance to infuse technology to help them manage their time better. So they're scared they're not going to have enough time to manage the positions. So the next question is, in getting in front of the advisors on a personal basis, in their own environment, meaning their offices, important ways to reach them? I think it is. But it also takes a lot of time. So one of the things that a lot of our clients come to us is with, how do I reach RAs, right? It's this really fast-growing channel in the market, but they're so different, and they're all over the place, geographically, the way they manage their practices. And so if you could get to every single one of those RAs to spread your message, whether you're selling a product or you're trying to teach them about an options strategy, that's a great effort, but it takes a lot of time. So what I would suggest is, yes, get in front of the advisors, but also have a plan to do it in a more scalable fashion, whether it's through online technology, like webinars. The OIC does a lot of webinars, or to get in front of them in a more scalable format, like a big meeting. I think it's a really important thing to scale the efforts. The next question is, are financial advisors afraid of getting their stock called away? I don't know the answer to that. To me, I think that's probably entrenched in the idea of managing the options positions from a time management perspective. So I think, yes, that could be a factor, but I also think that more simply, that's one of the pieces that's involved in managing their time. So if they're constantly worried about a situation like seeing the stock get called away, they have less time to do other things. And advisors are always trying to grow their business and manage relationships, and really starting these days to realize that they have to outsource and give away and delegate some of those other pieces of the business. So yes, I think that could be a thing, but it's probably more entrenched in that overall, how do I manage these positions? Do I have enough time to do it? So we have a few minutes left here. Does anyone else have questions in the audience? Any other questions? Great. Well, thank you so much. It's been great to spend time with you all here in this beautiful weather, and I really appreciate the invitation to come. Hope you enjoy the rest of the conference.
Thank you, Emily. Very good. Thank you very much. Thank you, Emily.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.